All right. So let's kick off this session. So hi everybody that joins the meeting. Welcome to OPYO webinar. This is our first webinar, so please be patient with us. My name is Nadav and I'm OPYO Business Development. Today we will focus this webinar on the two new models that we have, cash flow forecasting and IQ. And after each module, we'll have a session of Q&A. If you have any questions, just use the Q&A or just raise your hand and we can use it as an open discussion. This session is being recorded, so you can always come back and revisit the session. And okay, let's kick off this meeting. Amir?
Yeah. Hi, everyone. What do we want to discuss today? So basically, we want to show you later on today, we want to show you two new models, which we have in OPYO at the moment. For that, we'll follow the agenda you can see on your screen at the moment. We'll start with the catch-up, talking a little bit about OPYO, reminding us what we all do in OPYO, our solutions, and how it works. We'll talk about the main area in OPYO, the AR Pulse. We won't demonstrate the full solution. We'll just touch base with it because it's a milestone for creating the cash flow. Then we'll climb up and move up to the cash flow forecasting. I think that's the main focus of what we're discussing today. And then we'll move to the IQ, which is the analytical area of OPYO. Each of every one of these areas will focus. We'll give it a certain amount of time. So at the end, you'll see two things. One of them is the slides, and the other one is a working system. So you can get a feeling of the work and feel of how OPYO works. We can always follow up with questions. When we talk about OPYO, we work in three different areas. We start from left to right. We work in the working capital area. We're very focused on AR, AP, and inventories. The new companies, the smaller companies, which are generated in the tech environment, don't have inventories, but we also have companies that do have a main issue with the inventory. So OPYO touches those three areas. The second area we're discussing is the cash flow forecasting. If we collect information, we have it in OPYO, we want to create a good cash flow forecasting, which is a very complicated area on any financial activities. The third area is the customer credit and trade credit insurance control. When we want to manage our buyers, we want to understand if we have a certain amount of insurance or we have a credit limit which suits the outstanding balance. That's what we do in OPYO. OPYO is a solution which is a web-based solution. That means it's a solution that doesn't touch your internal systems. It works in the cloud based on Microsoft technology, Azure, and Power BI. And OPYO works as a service. That means we don't sell systems, we sell a solution and a service relating to it. When we talk about OPYO, we have three different working areas. The main area is what we call the control area, where we have different modules, both for the AP, the AR, and the inventories. And we do have a solution for the collectors. That means daily activities of collectors can be managed in OPYO. That's a solution that some of our customers select to use. That is in addition to the control environment. This is what we call the managerial area of OPYO. And in back of that, we have a back of office, which receives information every day, cleans that data, does the proper mapping, and brings the information into OPYO. We also know how to receive information from third parties. That means if we have insurance policies or we have external rating agencies, etc., that information can be brought into OPYO to enrich the picture. The next level is the IQ. That means that's the analytical side. We take the information we have in OPYO and we add analytics. That means we try to identify the trends, but not only identify them, explain them, give a proper explanation. I'll demonstrate that later on. Understanding the movement of an outstanding balance, understanding a change in collection, understanding a change in doubtful debt. Where is it related to? Where does it come from? We drill down from the reason to the source invoice, so we have all the information. Above that, the holy grail of working capital is actually analyzing and creating a rolling cash flow forecast. We do that in OPYO. We understand today, after learning this topic for many years, that a solution for a cash flow, a rolling cash forecast, doesn't know only to receive automated information, but we also have to have manual transactions and different sources of information, and OPYO allows that flexibility. We'll demonstrate that later on, but understand that we have a whole structure that climbs up to the rolling cash flow forecast. When we look at the CFO office, we see usually three areas of work. One of them is the controllers, the ones that have a regional view, a business view, collectors managing AR, AP, all those different activities. OPYO knows how to touch base in those areas. We won't focus where, but the main is the accounts receivable, accounts payable, and of course, all the finance operations of how we manage these things on a daily basis and create the proper reporting and the management. The second area is the treasury, where we have the main focus on the cash management, the risk management, credit insurance, and we also touch the currencies to identify cases of hedging, natural hedging, etc., all kinds of needs which are required in a corporate treasury. The third area is the BP&A when we want to plan ahead of time. Remember, we collect information of almost 3 years in OPYO. That means we have all the trends, all the activities, all the information in the system, and we can support all the planning activities and bring in both the AOP, the rolling forecast, and the actuals. That means we have the full suite of information which is needed. We're not replacing systems, but we're bringing another layer of information which can support our activities. How do we work? As I mentioned before, OPYO is not a system that we sell. It's a solution that we give. That means we give a full suite of solutions. People log into OPYO and they work in the cloud in our environment. That means that the process of bringing OPYO to life is quite simple compared to other implementations. We receive overnight information from any source system. That means you can have an ERP, which is NetSuite, Oracle, SAP, or you can have a hybrid solution, part are in Oracle and some are in NetSuite. OPYO knows how to receive that information from all those interfaces. We receive them overnight. Once that information is received into OPYO, we enrich it with information that comes from third parties in case they come. For example, global insurers, some companies have one, some have two, some have neither. That information moves into OPYO and then it's enriched and mapped. That means if we identify similar buyers with the same VAT number, we'll know how to create the collection. If we have payment terms, we'll know how to translate them into days. If we have a currency which is new, we'll identify the currency and know how to bring every day the new value of the currency. All that information flows through OPYO and is updated daily. That means the information is daily, always updated to the previous day. And then it's viewed in the three different angles that we have in OPYO, either the receivables, the payables, the inventory, and of course, the working capital and the cash. That means that every change that comes from the source system is reflected in OPYO and in the cash flow, the corporate cash flow. I want to focus now on one side of the working capital. We'll focus on the AR side, the receivables. Imagine that we can do the same demonstration for the payables or the inventory, but we'll focus with AR, which is the common area of what we do. One more slide before we drill down into OPYO, the system itself, and then I'll demonstrate all I'm saying now in OPYO. When we look at managing receivables, managing the AR, basically we have 4 working areas and then 2 sub-working areas. We look at the exposure. Exposure is what people call the outstanding balance, but that information usually is worked on the monthly or the quarterly area. OPYO does it on a daily basis. That gives us a lot of power of what we can do with that information. Second area, this is already something new that usually is not managed in a simple manner in the organization, is the risk and insurance, actually adding the layer of coverage we have for each outstanding balance. That means if we have an internal credit limit, an outstanding credit limit, if we have financial deals, securitization, factoring, all that information can be brought into OPYO. Collection, what did we collect yesterday? What do we expect it to collect tomorrow? How are we going to look till the end of the quarter? And if we want to roll the sales and bring in and create an AOP, we can do that as well. So all that information of collection lives in OPYO, and it gives the ability to the daily collection activities run in OPYO as well. Performance, the working capital. Why is this important? Because that gives us the ability to forecast the future. For each buyer and supplier, we create a DNA. We know when they pay, in what currency, if they pay in full, what days do they pay, and we start building a DNA for each buyer and supplier so we can forecast the future and identify changes in the patterns. Now, Nadav, you want to start for questions, or I'll move ahead and demonstrate in OPYO?
If we'll have any question, I'll stop you or raise you in the middle. Currently, you can go up.
Okay, so now we see OPYO at the moment. This is a web page, Azure Power BI. That means you log in with your username and password. We don't even manage separate usernames and passwords. We have an ISO 27001 standard. That means that we have full security over this information. When we look at OPYO from left to right, remember I showed you the slides regarding the different areas of the working capital. We're not going to demonstrate, I'm not going to perform the different activities in OPYO, just to give you the general or remind you what we do. We have the exposure, which is related to the outstanding balance. The AR, simply, if I click on a button, and we'll click it the second, I'll drill down and see the full aging report. Portfolio, regarding the credit limit, the outstanding balance versus the coverage that we have or the hedge that we have on this specific outstanding balance. Performance is focused on the working capital, commonly used as DSO, collection level. We use different terminology and we'll explain in a second, and the cash flow. The only reason that I'm touching base with this area is for the cash flow, to remind you how we reach the top cash flow or the consolidated cash flow for OPYO and the insurance SLA in case someone is insured. I'm only going to drill down into very, very simple views in this area. Each area has a full universe of information, but I just want to show you. We have what we call the aging report, which is created from the transactions itself. That means we receive all the invoices, all the transactions, credit memos, deposits, etc. All the receipts and all that information is closed daily. So we create on a daily basis an updated aging report. The portfolio brings in the area or the information which is related to the coverage or to the credit limit. And I want to drill down into the performance. And the performance, we take the DSO, we break it down to what we call days to cash, days to term, and days to due. The reason that we do that, it's a much accurate calculation, taking the transaction itself and calculating the number of days it takes us to collect an invoice, understanding what do we expect and how it happens in the actual world. That is what we need. It's a milestone for creating a smart cash forecast. Remember, some of the corporates use a global DSO to create the forecast. Some of them work on a regional. We take it invoice by invoice and we add in all the different dimensions. We do it by currency, we do it by transaction, we do it by supplier, etc. So we have a lot of information creating this forecast. So for each and every one of these buyers, we have the full DNA, the collection level, and the days to cash, the number of days it takes us on average to collect an invoice. And now we'll drill down to the cash flow. This cash flow is the main milestone for the one side of the cash flow, the inflows. Okay, mostly of the inflows fly through our systems in an automated manner. We do have inflows which are not automated, and we'll discuss in a second how we bring them in, but it mostly comes from actual transactions that fly into the system. I want to explain over the method we work in OPYO and we create the cash flow forecast, because understanding this is a key to understanding the way the cash flow works on a general perspective when we look from the top of the corporate. So we can slice this information and dice it from all the different dimensions, geographic, we can slice it by business activity, by the issuer of the invoice or the transaction itself, by the buyer, or even the currency. All this slicing and dicing, we also have the ability to do it by price or by quantity if it's required or necessary. So let's understand how we work and take it. When we have a short DSO, that means we have a days to cash or a DSO which is lower than 90 days, we don't have all the information at the beginning of the quarter for forecasting the quarter. That means we only have information, for example, if our days to cash is 40 days, we only have information looking forward in 40 days. So the first thing we need to do is adjust that number and create documents which haven't yet occurred, but we need to create them for creating the cash flow forecast. We need to make assumptions, and we do these assumptions buyer by buyer, assuming on a regular business course, how would he behave? So we start with expected. Expected are the actual transactions which are due valid and are ready to be collected. So you can see on a natural cause, for April, we have almost all the information. For May, we have less. And when we look into June, part of that information is not even full. We don't have that information. So the first step, remember, these are demo pieces of data. So ignore the numbers, just understand the concept. So when we talk about the expected, this is what is due. So we see $102 million of expected collection. That means we have a pile full of invoices which amount to $102 million. And we have the full breakdown by currency and all the other dimensions. The first thing we need to do is to adjust the expected QN. That means we need to assume how many invoices we'll have open by the end of the period when we look into the future. So when we look into the future, we understand that these 17 million will end up being 44 by the end of the period. Now, if you want to understand how this is built, we can drill down to buyer by buyer, and understand how we make these assumptions based on the trends and the behavior of this buyer. We do have customers that think there's more information to be brought into the system that can enrich and help us even have a better forecast, but that's it has to be investigated customer by customer to understand if it brings value. So the first thing is to adjust the expected QN. The next step is actually creating the rolling forecast. That means if we do have an invoice and we know it's valid, what is the probability of us collecting that invoice on time or collecting it at all? Or how much of that invoice is expected to be collected and in what currency? And that creates the rolling forecast. Of course, every day we bring in the actuals. So we have a full cycle of what we have in our pile to be collected, what should we have if we assume we want to see at the end of the period or the end of the quarter. And the rolling forecast means what is the probability of collecting that invoice. Now you would say, okay, everyone can make assumptions. How do you know if it works? So I'll show you the last thing on this screen is that for each and every one of our buyers, we do manage the calculation of how accurate we are. That means when we made the assumption, every buyer is a dot on this graph, and it represents, if he's on the line, that means what we expected, and the actual are almost aligned. That means if we take this buyer, for example, we expected 1.913, we collected 1.869. But if we do have buyers that are far away from the line and have a strong impact, we want to understand what we didn't forecast properly or what we're missing out. So we have a learning curve. The system, similar to us, understands and identifies who are the buyers that work well with the simulation, what of them have a strong impact, and then we only have a very, very small remaining portion of buyers we need to later investigate and understand why they don't work properly. And the system, because information comes in on a daily basis, we have day in, day out, we have the ability to enrich this forecast. Now I want to move to the cash forecast. Nadav, do we want to hold here for a second, or I just go ahead with the cash forecast?
No, just to explain how the OPYO account receivable is being integrated into the cash forecast and OPYO IQ.
Okay, so remember we have two areas which are now we have the full information from. We receive the transaction on a daily basis. We have the inflows and we have the outflows. Now what we need to do is put them together. So when we look into OPYO, we're trying to simulate something which is similar to the financial report, according to the different buckets that we have in the financial report, not in the same method. So financial reports work in the indirect method. OPYO works on the direct method, taking that information and creating it. So we have the operations, the investing, and then financing. For each and every one of these, we have different dimensions. And if I'll just go down here, we have the geographical dimension, we have the time dimension. That means we can drill down to a specific day. We have all the different currencies, and we have the flows. Flow type would be, is it operational? Is it investing? Is it financing? Class will be, is it an inflow or an outflow? Company type would be, is it collection from third-party customers? Is it other collections? And the category will say, is it a tax payment? Is it an interest payment? Is it a royalty, etc.? All the different activities that we do have in a finance organization. Another thing that we bring into OPYO is the AOP. We have the ability to bring in the AOP into the system so we can see all the things from the different dimensions. So if I'll take, for example, Q1 2004, and I'll start to drill down into the information, then I'll start with the operations. The next level will be drilling down to what type. Is it an inflow or an outflow? That means is it cash coming in or cash going out? In the inflow, what kind of an inflow we're looking at? Is it a collection from a third party or another collection? Or even better, let me look at the outflows, because the outflows will show me, give me the ability to drill down to the specific category. Now, all this mapping of different categories, you can see what we have is the automated third-party disbursement. That means all the transactions that run through the AP go automatically to the third-party disbursement. That means every activity, every payment that was done flows into OPYO, and you know where it was paid, how it was paid, to what bank account it was paid, etc. And it's split into categories. We do the automated mapping from the buyer dimension. We know how to identify what type of buyer it is, and this is, of course, flexible and can be changed, but we build up the full tree of disbursement. And we have all the different activities of the disbursement. So if I'll click, we can see what comes from marketing, what comes from material, what comes from payroll, publishers, royalties, etc., tax, utilities, all the disbursement. We also have the ability to bring in manual activities. That means that if we have an activity in the inflow that comes from a different activity that doesn't come from a manual activity, we have the ability, we have either a file which can be uploaded, or the service that we give of updating those transactions, we update them manually in OPYO. That means we receive a transaction. This is an expected, for example, lump of payroll, which is expected in Australia in a certain amount, in a certain currency, and we'll place it in the right day in the forecast. And then we can decide either when the day occurs, the forecast becomes the actual, or we want to adjust it, we want to bring in actual as well. And that creates the full picture. So we identify what are the missing transactions, and we create the full picture of the cash forecast. This can be sliced by all dimensions, okay? This is the way we look at it from the total, but we can look at it either by market, by periodic, or we can also look at the information from a currency perspective. We want to understand, for example, if we have a natural hedging, that means if all our balances are zero, that means the CAD, the inflows and the outflows are netted, and we have hedging issues in other areas. That means we have the ability from here to understand and also plan our next year from a currency perspective. On the graph side, we'll always show the periodic or the accumulated view. That means I want to see what happened in the different periods, or I want to see an accumulated view of how the cash is building up over time compared to the AOP. And of course, we have another system, another view, which is the Explore view. Gives us the ability to drill down, for example, into the market. And very, very simply, let us identify how the different activities of different markets work over the time. We can see what happened in parallel in the US, in Japan, in Germany, and see the different quarters as they build up and drill down where these activities come from. Remember, everything comes from transactions, and you can drill down to the specific invoice. That means you have the full set of information to create this forecast, but everything is structured in OPYO. That means I just want to sum up the cash flow. We have two automated processes that create a daily forecast, taking existing information, rolling it into analytics, taking that forecast, bringing it into one place, offsetting the inflows and the outflows with all the different dimensions, and checking every day if that actual is existing. That means, does it happen, or what we planned doesn't match reality? And of course, our ability to bring in the AOP and see if what we planned is what actually happens, or we need to do something or make adjustments, okay? So this can be fully updated on a daily basis. And remember, because it's an open system, the local controller, the certain business unit can see his business, the one in a certain geography can see his business, and the corporate can see everything consolidated in one currency. I didn't mention it before, but it's important to say that when you look into OPYO, everyone can see the information from his point of view. That means I can save my own views, I can download information, but I can also see the information in my local currency. For example, if I'm a controller that sits in Australia and I want to see Australian dollars, I can see everything in Australian dollars and ensure that I'm fully aligned, but the corporate will see dollars, and corporate will be able to see the impact of the FX if something has changed, or we don't have, if we have any discrepancies between what we see or what we report. And of course, everything is usually on a regular basis aligned. That means we do daily activities of reconciliation. Another small thing I just want to show over here, we always have the snap date for when the information is relevant. We always update it for the previous days. We have customers that want to do it more than once a day. We think that once a day is enough, but it's always open for discussion. And another important thing is the invoice captured. Many people think that we have a lot of gibberish in the system, and that's why all these calculations won't work. The predefined activity that OPYO does before we even run any analytics is check the quality of data. That means we check each invoice to ensure that it has all the full set of information so we can use. If we identify an invoice which has a fault, which is missing a piece of information, which is not accurate, then we'll put it aside so it doesn't distort the calculations. And that's part of what happens in what we call the OPYO back office. Now I want to jump into the OPYO IQ environment. Nadav, do
Just
we
a
want to
quick
hold here?
question.
Yeah.
Yeah, just a quick question here. When you forecast ahead, do you take any probability into account when you forecast cash going
Yeah,
forward?
we take, but the probability is done on a buyer. That means we create the buyer DNA. We know that the buyer, for example, it pays 98 of his open invoices. He always pays on a Monday, and he pays in euros, and he pays to a specific bank account. So we hold that information and we check it over time. We always, for each calculation, we take 12 months of information to identify how accurate it is. If we don't have 12 months, then we shorten it to 6. And we check all the different to see what's the best prediction of how this buyer will behave. And because we add the ability for a manual activity, that means if someone identifies something is not accurate or he has another piece of information, we can always update OPYO manually saying, although you don't see this collection in the system, you don't see this payment, I know it's supposed to happen before the end of the month or the quarter. I want to have it in the forecast. So that gives us an automated probability, which is works on all the different dimensions of everything, all the different angles of looking at the probability of something happening. We take that into account in an automated manner. I hope I answered that one.
Got it.
Okay, so the next area I want to show is what we call the OPYO IQ. That's the analytical area. Okay, we're moving from the cash flow. Remember, we had the AR. In the AR, we have the pulse and the collectors, the two working areas. We have the AP, which works on the whole universe of the payables. We have the cash flow forecast, which is an offset corporate cash flow. And now I want to drill down into the IQ, which is the analytical area of OPYO. Now we collected a lot of information, but we still have to start understanding how it works. Now, it's not only it's not a good enough solution showing graphs and letting us understand or try to analyze the differences between the period. OPYO already creates that structure and runs analytics on different levels, and I want to demonstrate this for you. So we have an area over here, which is called the insights in the OPYO. We have in this environment, we have three areas. One of them is the cash flow, showing the full cash flow and the main KPIs. The other one is the insights. I want to take a certain segment and I want to see and understand the different changes. And we have the advisory, which translates views to statements. That means don't show me a graph of a risky buyer. Tell me that this specific buyer is risky and tell me what I need to do. For example, increase the level of coverage or stop selling to the specific buyer because we identify a risk coming either from the market or from this behavior. So now that we have all this information, let's try to analyze and see how OPYO can explain this movement. So I'm taking, for example, the outstanding invoices. I have a changing balances. We can see the trend over time. And I selected over here 2 periods. I want to see April and May. I do see between April and May, I do see an increase. Okay, I can see an increase of about $4 million. I can see the structure of the new invoices issued, the actual collection, and the outstanding balance. But I want to understand what was the root cause for this change over the period. So all we need to do is click a button in OPYO and ask OPYO to explain the movement. Okay, so what OPYO would do, it will explain the movement from many different dimensions. So let's start from here, for example. We see and understand we have a change in the outstanding balance. So OPYO will explain that the main cause for the change comes from the US and also for APAC, but it's offset, for example, by Europe, creating a higher AR balance. Now, this usually used to take time to create manually, so now we understand how it works on the regional side. But we want to also understand how it works on the buyer side. So OPYO runs that analytics and says, listen, the main change comes from a buyer named BP, that its balance has changed from 2.3 to 3.2. It happens by Motion Industries, XOR, and EXA, but it's offset by these specific buyers, which offset that information. We do have customers that also bring that information by collector or by account manager, giving us a full analytical view of these changes. Now remember, different than the quarterly view, when we wait till the end of the quarter, we close the books and we try to analyze the changes, OPYO gives us the ability to analyze this ongoing. That means every day we have this analytic working in the background for us. Let me demonstrate in another area. I think I saved a specific view on a net flow. And just make sure what I did over here. So I want to look at a monthly net flow. So for example, also here, we do see a change between March and April between a net flow of $2 million to $15 million. We do see an increase, and we want to understand where that comes from. Now remember, when we look at the net flow, we have two sides. It's more complicated than just looking at the aging. We have an inflow, we have an outflow, and we also have different groups and types of collections or disbursement. So if we'll ask OPYO to analyze and give us an answer, we'll be able to both see the regional or the business dimension, but also see the category. So we can see that we had in this example, we did have an increase in collections. That means we do see that the collection increased, for example, in this case, from 34.4 to $43.3 million. We do see that we paid less to publishers, we paid less to services, and also we paid less on legal services and materials. So this creates the increase in the cash flow between these different periods. So OPYO takes the full analytics of all these two suites, puts them together, and creates a full new layer of analytics explaining things that used to take a long time in a manual activity. Now, unfortunately, in our world, people talk about solutions such as AI or having smart systems. I think that in the financial world, and this is from our experience, the information is not structured good enough for a system just running these analytics. That's why OPYO believes that we need to structure all this information. Remember the different layers. We started from a low layer of creating a managerial view, climbing up to a cash flow, a consolidated cash flow, and then running the level of analytics, trying to understand why these movements happen on a daily basis.
Who usually uses those OPYO IQ and the cash flow in a certain corporate?
Okay, so it depends on the organizations. There used to be periods about a year and a half ago where most of the corporates were focused on AR. That means they wanted to know where their balances are, etc. Today, most of the corporates that we work with are very, very focused on the cash flow. That means cash flow is in focus, and that means that the full organization is aligned. So it's less for the collectors and the actual people that are managing the AR. It's more for controllers and people in the corporate that want to get a consolidated cash flow without running and struggling and collecting information and consolidating from all the different users, running after global procurement, running after the EU controller, after running after a business manager, but actually everything comes to the desk and then they can ask these questions. So we see a shifting from AR managers and controllers to more and more financial corporate people trying to understand these activities. It doesn't change the fact that all the different regionals or business controllers that need to create a cash flow forecast for the near future use OPYO as their base, and then they use the adjustments, and then they shift it to the corporate, having a full or enriched picture. So it's a hybrid group of users. Just one more thing, most of our customers start with AR. That means that's the natural cause. Then they move to the side of the AP, which is usually less in focus, but is a very material part of the cash flow. And only the combination of both of them, adding in the manual transactions, that means the bank activities, royalties, specific payrolls, brings a full and crystal picture of what happens in the corporate.
Good.
Do we want to open it for questions from our guests today?
We can. If anybody in the crowd has any question, just raise your hand or shout in the Q&A, and we'll take it from there. If not, Amir, I think that we can continue.
No questions? Okay, so I want to touch base with two more things about OPYO that is important to know. Different than standard projects of IT, which create either daily interfaces into your system or desire a project that needs a full IT team to work. OPYO took a different route. Our route is a service-based solution, and we use unstructured information. We receive information which is raw information from the core system. For example, for managing the AR, we receive 3 files on a daily basis: the master data, all the transactions, invoices, credit memos, etc., and all the receipts. And that's good enough for us to create the full picture. That's why onboarding OPYO is less risky than any other standard project you would want to do in this environment, because you can understand very, very quickly if we manage to deliver or not. Delivery times are very, very short because of the way it's structured, and they have a lower level of risk because they don't try to cross the line and create a direct interface. We do see more and more corporates shifting to the needs of daily cash flows, answering management more and more on a regular basis, trying to identify different angles of looking into the cash flow and understanding different transactions and movements. Saying that, we have an OPYO, a full service that if people need a specific report, something which is not structured in OPYO, we understand we need to deliver, so we know how to create these specific or unique views sometimes that a management wants to see, not leave it to you to take data and run the analytics, but create an actual view which supports what you need. So you don't need to create it every month, but it's a standard view. In OPYO, you just need to click and see the information. And I just want to sum up with another important value. Because OPYO gives this service to many users in different corporates and different scales, different environments and business environments, we learn the different needs that come from all the different businesses. Everyone brings a certain need, and we know how to adapt it as part of our solution in OPYO to enrich the solution. That's why we create a quite common language of how people want to manage the AR, how people want to manage their cash flow forecast, how people want to manage their analytics, what kind of views do they expect. And that's the power of a community working. That means we have different users and different levels that bring in and enrich our system and make it smarter and smarter. Those are things that happen on a regular basis. So if there are no further questions, I just want to wrap up. Nadav, is there anything else, or you want me to wrap up?
No, I think that we can just wrap up. And if you have any other questions or follow-up questions, then
no problem.
people can
We'll be happy. We'll be happy to run any session you want on a follow-up question. If you want to drill down, of course, we were very high level today, demonstrating OPYO and showing you the different abilities. I just want to wrap up. Remember where we come from, the solution, what are we trying to support and give? We talked about the pulse, the managerial area, the managerial tier, the regular daily work environment for different controllers, AR managers, business controllers, etc. We climbed up to the cash flow forecasting, already taking all that information that we collected and creating a smart cash flow forecasting, which is just daily and knows how to check its accuracy with taking all into account all that information and ensuring that it knows how to close versus the bank accounts. And we have the last tier, which is the analytical tier, which says if we have all that information, let's try to understand and analyze. Let's not deliver information, but deliver insights, reducing the amount of time and level of work needed to identify a smart change or understand why things happen in the corporate itself, to allow changing adjustments, things that need to be done. That's it. So if I think we reached the end of our session today. Feel free to send us questions. Feel free to address us. We'll be happy to answer anything that comes either by call or by mail. We're here to support. Thank you very, very much. Nadav, anything else? Okay.
Thank you, guys. Thank you for your time. If you have any questions, just don't hesitate to just shoot us any question, and we'll be happy to follow up.
Thank you very much.
All right.
Bye-bye.